United Technologies reported earnings. It was solid, just as you had expected. We talked about this last week. One of the highlights there was the Pratt & Whitney division. The decline wasn't as bad as most had expected. What happened?
Well, I think first the quarter was pretty impressive in this kind of macro backdrop where the fourth quarter was still very challenging, right? Just from the global economies, but then also you had the fiscal cliff, and you just had a lot of just unknowns. So the quarter was good. They beat revenues. They beat they missed a little bit. Excuse me. They beat earnings. They missed a little bit on the revenue line, but it was the orders that were the most important to me, and that's just because the orders were better than expected. Even the declines were less than people expected, but I would say that gives you better visibility into 2013. And in fact, the company did raise their guidance in terms of the Sikorsky division, and I do think that there's upside in North America HVAC because those orders up 20%, and we know that the U.S. commercial construction market is just getting going. So I think there's more upside here. They reiterated guidance. That's great. I think that's a victory in this environment, and I think that means that there's conservative numbers out there, I think, expected for the full year.
Speaking of orders, aerospace was the one area that was kind of a disappointment.
Right.
Is that a concern? Because I thought aerospace was a good area to be in going into this cyclical recovery.
Right. Well, orders were down 4%, but that's better than last quarter, which was down 6%. So you're seeing kind of less bad. That's really at the end of the day what's happening. And I think for the company, 2013, you have the Goodrich deal, you've got those synergies. Now you've got HVAC starting to do better. You've got some of their aerospace, some of the defense aerospace businesses doing a little less bad. I think it sets up well for 2013. As I say, I think earnings guidance is pretty conservative. And this company, by the way, will then now be able to start buying back stock again, right? Because the Goodrich deal is done, closed, and now 2013 sets them up pretty well. They've got $5 billion in cash annually that they're going to be able to deploy. So I think you're going to see a lot of activity. There's a great management team. It was a fabulous conference call.
When do you see the free cash or the buybacks or dividend boost? Is
yeah,
it the next coming couple quarters?
I think the next couple quarters, certainly, definitely this year. And so, we'll see, but that certainly is a positive catalyst. I'd much rather see the turn in the fundamentals. I think we're going to see kind of a slow, methodical change, but I do see it, and I still think this valuation is very attractive.
The stock has had a nice move, though, just in this year, the last 20-some days. Do you wait for a pullback to buy more of it, though?
Yeah, we were buying it in the low 80s, and so it certainly had a nice move. And that was a little nerve-wracking headed into the quarter, right? Because thought that the expectations were a little high, but they were able to deliver. And again, I think the numbers are conservative enough so that should you get that pullback, you definitely want to be buying. I mean, I think low 80s is definitely a no-brainer. I've got a $100 target pretty easily.
Okay, well, there you have it. The quarter was great, but you got to wait for that pullback to buy the stock.